Hey everyone, welcome back to Corporate Decoder. Today, Canton Strategic Holdings just filed an 8K report about its second quarter results, and I am seeing a mixed bag of news for investors. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is reporting its latest financial performance. And while there are some promising signs, there are also areas that need a closer look. So, what exactly is this filing about? It is a current report that companies file to announce major events that shareholders should know about. In this case, Canton Strategic Holdings Inc. is releasing its financial and operating results for the second quarter that ended on the 30th of June 2026. They've given us a press release with all the details, and we're going to dive into what that means. This company, Canton Strategic Holdings Incorporated, is registered in Delaware and trades on the Nasdaq under the ticker CNTN. It's important to note that the company is identifying itself as an emerging growth company. This means it can take advantage of certain relaxed reporting requirements, which is common for newer or smaller companies. Their common stock is listed on the Nasdaq Stock Market LLC. This is where most investors would buy or sell shares of CNTN. Now let's get to the meat of the report, the financial results. The company announced its performance for the second quarter of 2026. While the actual press release is attached as an exhibit, the filing itself tells us this information is being furnished, not officially filed. This is a subtle but important distinction. It means that while the information is public, it does not carry the same legal weight as a formally filed report under certain sections of the Exchange Act. Think of it as a preliminary heads up, not a finalized audited statement for some legal purposes. This exhibit, number 99.1, is the press release detailing their financial and operational results. We are going to interpret what that press release implies. Since the press release itself is not directly embedded in this document, we need to rely on the surrounding context and general knowledge of how these reports function. Often, these press releases are where you find the key numbers. For a company like Canton Strategic Holdings Incorporated, which is in the healthcare and biotechnology sector, quarterly results are critical for understanding its progress, especially if it is a growth stage company. Investors will be looking at revenue growth, expenses, and any signs of profitability or cash burn. The context provided about CNTN tells us it has a market cap of around $156 million and a current stock price of $2.02. This places it firmly in the small cap territory. It is also noted that it has a relatively small number of employees, just 12. This suggests a lean operation, possibly focused on research and development or a specialized niche. Major institutional holders like ARK Investment Management and BlackRock are on board, which can be a positive sign indicating confidence from large players. However, the news headlines mention a sizable Q2 2026 loss, alongside the first Canton network revenue. This is a classic scenario in biotech or tech startups, generating some revenue but still experiencing significant losses as they invest in growth and development. When we look at past headlines, there is discussion about their cash burn rate, which is how quickly a company is spending its available cash. This is a critical metric for companies that are not yet profitable. Yahoo Finance's May 2026 headline, "We're not very worried about Canton Strategic Holdings. Nasdaq CNTN cash burn rate suggests that, at least at that time, the market believed the company had enough runway." However, today's report mentioning a sizable Q2 2026 loss might signal a change in that perception, or at least warrant a fresh look. The fact that they rang the Nasdaq closing bell earlier in the year shows a level of engagement and visibility that's important for smaller companies. It can help attract attention from investors and the media. Let's think about what a sizable loss means for a company like this. In the biotech or healthcare sector, companies often spend heavily on research, clinical trials, and regulatory approvals. This can lead to significant losses for many years before a product becomes commercially successful. The first Canton network revenue is a sign of progress, indicating they are starting to monetize their efforts. However, the size of the loss relative to this new revenue is the key. If the loss is much larger than the revenue, it means they are still in a heavy investment phase. The date of the report is the 14th of August 2026, which is the same date as the press release. This is typical for an 8K filing where the event and the reporting are closely timed. The IRS employer identification number 84,262,541 is a standard piece of information for tax purposes. The address provided is a New York City address, which is common for companies seeking access to capital markets and talent. As mentioned earlier, the company checked the box indicating it is an emerging growth company. This is crucial for understanding its reporting obligations and potential flexibility. This section lists the exhibits filed with the report. Exhibit 99.1 is the press release we've been discussing, and Exhibit 104 is the cover page formatted in inline XBRL, which is a standard for financial reporting. The only substantive exhibit here is the press release from the 14th of August 2026. Without the actual content of that press release, we are inferring the key takeaways based on the context provided by the headlines and the nature of an 8K filing for a company in this sector. The mention of a sizable Q2 2026 loss and first Canton network revenue is the most significant piece of information we can glean from this filing itself. Looking at the broader picture, Canton Strategic Holdings is in a very competitive and capital-intensive industry. The fact that they are generating revenue for the first time with their Canton network is a positive step. It suggests that their products or services are starting to gain traction in the market. However, a sizable loss indicates that the costs associated with developing and bringing these offerings to market are substantial. This is a common narrative for many biotech and technology companies. They often prioritize growth and market penetration over short-term profitability, with the expectation that future revenues will eventually outpace costs. The presence of major institutional investors like ARK Invest and BlackRock suggests that these sophisticated investors see potential in the company's long-term strategy. ARK Invest in particular is known for investing in disruptive technologies and innovative companies. Their continued stake could signal their belief in Canton Strategic Holdings' ability to overcome its current challenges and achieve future success. However, the risk for investors in such companies is high. The cash burn rate is a critical indicator. If the company's cash reserves are depleted too quickly without a clear path to profitability or further funding, it could face financial distress. Headlines from May about not being very worried about the cash burn rate are now juxtaposed with a sizable loss in August. This warrants a closer examination of the company's cash position and its spending trajectory. Comparatively, companies like Theranos, which initially showed promise but ultimately failed due to fraudulent claims and operational issues, serve as a cautionary tale for high risk, high reward ventures in technology. While Canton Strategic Holdings is not facing allegations of fraud, the principle of needing substantial funding and a clear executable plan is paramount. Other biotech companies that have successfully navigated the path from development to profitability, like Moderna or Biotech, demonstrate that significant investment and time are often required. However, their journeys also involve substantial capital raises and a clear scientific or technological breakthrough. What I am actually looking for is a clear explanation of how the first Canton network revenue will grow and what the timeline is for reaching profitability, or at least reducing the cash burn rate to a more sustainable level. The sizable loss needs to be understood in the context of the investments being made and the expected returns from those investments. Is the revenue growth strong enough to justify the losses? Are the investments in line with industry benchmarks? The risk I am watching is whether the company can continue to fund its operations and growth initiatives without significantly diluting existing shareholders or facing a liquidity crunch. With only 12 employees, it suggests a highly focused effort, but also perhaps a limited capacity to execute on multiple fronts simultaneously. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, liking and subscribing would be greatly appreciated. And join our Discord in the description.